Hey traders, Raghee here. We should be good on the audio and video. Welcome to another episode of Charts and Coffee. Should be good to go. Yes. All right. Good to see everybody. All right. So let's get to it. Let's get to it, gang. As always, great to have you. Happy Thursday, everyone. Hope everyone's doing well. All right. So, got some notes here in front of me, some trades we are looking to start getting to work. I'm still seeing a lot of optimism to the upside. I don't think that's going to be changing anytime soon. So we're going to stick with the bullish calls. I know right now we're going to start getting a lot of chatter about pullbacks in 1999. That conversation, that narrative, mainly because financial media always needs some new narrative. Since we lack the new, we just go into the recycled. So do not be surprised if we start hearing the calls for, the implosion or whatever. I guess they've just run out of things to talk about within the context of the uptrend. Avoid parabolic markets. I mean, that's something we talk about in the futures room, in the sector secrets mastery room. Avoid those parabolic markets unless you are used to trading them. I think a lot of people are going to get stung on those the most. If you don't know what a parabolic market is, come join us in the futures room, the sector secrets mastery. They are markets that have accelerated in a way that makes their behavior a little bit different than a typical uptrend. So you might say, well, Rog, what's a parabolic market? It's really any kind of runaway. I think, let's see, I was looking at Johnson & Johnson the other day, some of the stocks. See, Johnson & Johnson has pretty freshly, within the last 4 sessions, gone parabolic, right? So those, and it may not look like much because it's not an overextended, really obvious parabolic move, but you want to get these moves really early in their cycle. So those are some of the things that are on my mind here. And, those are things that I also want to make sure we know the difference, a line in the sand, gang, a really firm line in the sand where we know the difference between what could be a pullback and what could be, it really in the realm of a retracement and versus a reversal, retracement versus reversal, right? So if I'm looking at a retracement, which would just be the market coming back down and then continuing its move higher. See, on the S&P, for example, we could breach 3,700, even get down to 3,690 and still have what I would define, right, with my tool. So we have a black and white, identifiable, easy to visualize way that we use consistently. So we have a process. A breach of 3,700, not much, but a small one would be fine. What about the NAS? What about the NAS? The NAS is a really good example of when, let me zoom in here. And again, we'll show you the difference between a correction, that move to the wave. How many folks thought that was the beginning of a reversal? As long as this thing's trading above, I'd say about 12.6, we're still looking at retracement, not reversal zones. Let me show you an example of one we took in our Sector Secrets Mastery Room and talked about also in the futures room. This is a swing trade. This is a swing trade, right? In other words, daily time frame, take advantage of the retracement in an established trend, look for the continuation. That happened right back in here, right? So these are still, I believe, bullish times, all right? Everyone's going to pick where they fall within the expectations of the market. Mine are not solely macro driven, certainly not driven by any chucklehead on television. It's going to be based on the path of least resistance that is presented to us right now. And that's still bullish. That's still bullish. So I'm not going to think that a retracement is the trade I want, because remember, if you get wrapped up in, oh my gosh, this might be the high and we're going to retrace, great. You know what an easy solution for that is? Don't buy the high. It's a secret. Don't buy the high, right? Wait for the retracement, because the only folks worried about a retracement, concerned about whether or not a move to the downside is going to be problematic, are the ones that buy the highs. Don't do it. The risk reward up there is awful. It's awful unless Let's go back to Johnson and Johnson, unless we have a market that's gone parabolic and freshly parabolic at that. That's kind of what are some of the look. They're normal words, but we use them in a different way. Trend compounding, right? What do I mean by trend compounding? How do I line up index sector stock in such a way that I am supercharging the likelihood of the path resistance moving higher by remembering that stocks are influenced by the ETFs, right? I don't even use the word sector. I mean, only, right? I mean, sector is part of the ETF conversation, but let's understand why the sector is so influential now, because of all these ETFs that have these stocks bundled together, okay? All right, so we can understand what's happening at an individual stock level and increase the probability of better trades when we stack that index ETF sector stocks or index sector stock approach. ETFs are the key, gang, understanding that. So that's definitely something we've talked about a lot. So that's the trend compounding. And then what else are we looking for? Freshly parabolic. That's kind of a new little idea that I'm springing on you guys. What does that mean? Because if a market starts to accelerate, well into the acceleration, you're actually in a more vulnerable spot. You're out on the limb, right? But when you can catch that quickly using historical price movement, which is a key part of what we do, then you've got a kind of a inside track on, oh, wait a minute, the behavior is outside the norm, right? That's what we're looking at. What's normal, historically normal in the volatility, and when has it expanded beyond the norm? So clearly I am well caffeinated this morning. I've been raring to go since about 4:30, so feels like midday right now. But nonetheless, let's go ahead and tackle some more questions. Hey there, Rolex says, futures are up. Look, even if we pull back a little bit, that is the pitch, right? Right now, this is follow through. So we have some positions that are already built. I will tell you, I kind of feel a little bit like there are some laggards in the market, some of which, full transparency, a couple of which I feel like I have on my book, and I'll deal with that. But there's a lot that I think are working really well. We've got Nike on the book. We've got Starbucks in the book, Long Dow in the book. So in the book, meaning the open trades that we have. So I have a couple of laggards, let me be perfectly frank. I think it's really important for someone sitting on this side of the mic and camera to say, hey, look, I have some Oracle exposure too. Right. And it's just not cooperating. It's with a very small degree of unrealized loss, but still pretty irksome to see that we're continuing to see movement to the upside in semis, continuing to see movement to the upside in the NAS. And yet I kind of have a laggard here. So it happens. It happens, gang. I'm going to be straight up with you guys, but we have a lot that are really moving quite well. And Starbucks is one of them too. So you always got to not look at your book in this whole way where you say, well, my P&L's up. Make sure you know that within the Starbucks and the Nike positions, which we have, there are going to be some positions like an Oracle where you have to take a really good discerning eye and say, can I just cut this one loose? I can put my capital to work elsewhere in a smarter way. So I hope that helps. But yeah, we're up. Juan asks, hey, Juan, this is a really popular question that I've been getting. And it's one tied to really more so for me, the crude oil narrative more directly. It's going to be bullish, generally speaking, I would imagine. But I think it's really more political hay than it is trading hay. I think there's going to be some stocks that are going to move lower because of this. I'm not interested in that play. I really am not interested in that play. But there's more political hay here than there is trading hay. And I think the best place to play this will continue to be RB futures. That's the RBOB gasoline, crude oil, West Texas Intermediate, Brent, not so much Brent, West Texas Intermediate potentially, and UGA and USO ETFs as a alternative to the commodities markets. So thanks for the question. Definitely. Is Square one of the laggards? Yeah, I have exposure to Square. Square is so fresh a position for me. I just got into this. So yes, I agree, Chris. It's a little bit of a laggard, but I just got into this. And I will say there's a couple places that I should have been more aggressive knowing the overall tide. So I'm okay with Square. You might say, well, Rob, give us an example. Here's a perfect example of the kind of trades that I like with a tide. Take two. Take two. So I agree. Square is a little bit of an example of a laggard. Yeah, but I'm willing to be patient with that one because it just fired. Coke, I am definitely not interested in Coke. Structure isn't there. It's a downtrend. So this goes against one of my tenets, one of my rules, which is don't top and bottom pick, right? You got a lot of top pickers in the broader indices. They've been getting run over and warning of things that haven't really happened for a really long time. So the minute someone starts talking about reversals or dramatic moves to the downside without following that up to say it's a pitch that we can buy, I just tune that right out. Yes, they're going to happen, and I hope they're right, right? Isn't that the flip side of that? I hope they're right, but that's not the trade, right? So I'll say the same thing here with Coke. So many things moving higher. Coke, Baba. Please focus on the things that are rising with the tide. I hope that makes sense. Sorry, I can't see my screen here. There we go. All right. So yeah, I think that we want to avoid markets that are double red. Not that there's anything wrong with looking for shorts, but again, the overall index, ETF sector, stock, that's not where this would fall in line. I think somewhere between 47 and 48, you might get an oversold zone. But what about GM? What about GM? So let's take a look at GM. GM, that's parabolic, gang. That's parabolic. That's one of the markets where, yes, we're double green, absolutely moving higher, but trading a parabolic uptrend, a freshly parabolic uptrend, and sort of a vanilla trend. I like vanilla trends, right? Nike and Starbucks were actually fairly vanilla trends. I prefer those. This is bullish. I don't want to pick a top here. I mean, I don't hate my money. I don't want to pick a top, but I certainly don't want to buy at the top because, again, I don't hate my money. So I would say unless you're pretty well versed in momentum breakouts, unless you're pretty well versed in parabolic markets, be really careful. They're the most tempting to want to trade, and yet I think they're some of the trickiest to trade. Focus on some nice vanilla trends, and then once you kind of cut your teeth or you have a process that you've developed or learned from somebody else that allows you to tackle a parabolic trend, which is a whole different animal, gang, as compared to, say, a vanilla trend. Vanilla meaning just a plain old ordinary, very pedestrian, boring trend. Be careful with a market like GM. But I do like it. In terms of if I can find a setup within the context of this move to manage risk and get long. Yeah, I'm with you there. All right. What else do we have here? Thoughts on Disney? I do like Diz. We're in Diz, and while that little move there was, okay, I'm looking for something closer to a swing high or even the recent highs. There's December highs. But again, I know it's gone yellow, so you might say, but wait a minute, Raghee, it went yellow, but it's a fairly freshly yellow market. It's not one that got really annihilated printing red grab candles. We don't see them. Not even a blue, but the degree to which it fell, with just over 12 points, created enough havoc within the context of the organization of our 8, 13, 21, and 34, where things got a little wobbly. I don't mind wobbly. It's like missing a step. You ever walk down a sidewalk and you trip on one of the edges of the pavement? It just tripped for a second. I think it's still going in the forward direction. So I do like Diz. Etsy. What do I think about Etsy? Etsy, parabolic, Etsy, double green. I guess for me, right, what I will always ask, not that it's necessarily, it's a rhetorical question, but there's no right or wrong here. I think it's more about know thyself, right? So if you like this, if Etsy got your attention in that window, as opposed to this window, neither is right or wrong, right? I think folks in probably both windows, depending on how they position themselves, are probably doing okay. But which window, this one or this one, do you tend to gravitate towards? That's going to tell you a lot about what gets your attention. This does not get my attention in the least. This is what gets my attention. Again, gang, it's not a matter of right or wrong. They're both buys. Okay, this is parabolic, so this is kind of warning to me. This low risk, high risk reward correction. So that's what I mean about knowing which environment gets your attention. Again, this isn't a right or wrong thing. This is really more about knowing what it is that you tend to want to trade. And this has never been something I like. I actually do not like parabolic markets as a general rule to engage. I like a market going parabolic after I get in, right? That's what you see here. Pullback, parabolic. That's what we love. I don't like to engage in markets once the train has left the station at high speed. Again, nothing wrong with it, but know the environment you're trading. Peloton is actually a really nice double green. We like it. Pullback buy, we just saw that right here. That's kind of my point exactly. Pullback buy here, pullback buy there. That's the pitch. Is one major league batter's pitch, Hall of Fame bound, home run hitter or not, is one hitter's pitch the same as all hitters' pitch? Is one trader's preferred zone the same as all traders' preferred zones? Of course not. This is where we're discerning all sorts of hitters, and all sorts of zones can be big league successful batters, right? Same thing with the trading. You've got to spend most of your time determining what environment and what zone works for you, not what I like. Now, my job then is to be as transparent as possible to describe that zone as best as I can. As I say, conscious competence, which is actually very challenging. So I've got to decode things that are almost subconscious at this point. But the more I can decode what I do to myself and to you guys, now you know my pitch. Now you know my zone. That's all. And if you go, you know what, Rag, I like that zone too. Presto, you've got the ability to start to say, well, if someone's doing something in this area and I like to do something in this area, I need to find out what they're doing. I need to find out how to recognize that pitch. Jimmy asks, am I holding Starbucks through earnings? I almost never do. I say almost. There is something called a shockwave trade. Very rare. I just call it a shockwave because of the shock of a earnings event. If Starbucks meets two specific criteria going into earnings related to my position, then maybe, but it won't have been I will have at least scaled out once and realized a profit. So it's very rare. But if I get that set up, if I get that shockwave set up, then we're in Starbucks. So then I can alert to the folks in Starbucks with me in our Sector Secrets Mastery and say, look, these two criteria are met. We've scaled out of 50% of our position at our target. And now if we want to take the extra risk, kind of the no guts, no glory trade, which I'm not a fan of, but it's very Butch and Sundance. But sometimes if the criteria is right, we can go for it. And that's kind of the best way to describe how I infrequently trade through, not to, but through earnings. I hope that makes sense. All right. So I usually will not, though, because it's got to be that very specific shockwave setup. All right, gang. And just like that, gosh, that 20 minutes flew by. Thank you as always. Oh, somebody asked about pins. I don't mind Pinterest, but it's going to have to be for a more conservative level. We've done the Pinterest thing. All right. I bought Pinterest in here, took a nice ride to the upside. Would I like to do it again? I would, but it's going to be a little bit more conservative. It certainly isn't a short. I do like the long side. But because it's gotten a little lumpier, a little more blue, a little bit more neutral, I'm going to be a little bit more patient. Nothing wrong with that, right? I'd rather miss it. So here's another thing you should know about me. I'd rather miss a trade than be in a trade I wish I wasn't in. That's a huge distinction, gang. You might say, Rag, I'd rather be in the trades. You got to be in it to win it. I get that too. It's not a right or wrong again, gang. It's just the spectrum of mindsets that make up this wonderful marketplace we live in. So I'd rather be flat than in something that I'd prefer not to have taken. So my trading style is infrequent, much more discerning, very specific setups. And if it's not, the criteria are met, whether it's a day trade or whether that's a end of day trade. I think the chronic problem for most traders, very simple. over trading. And I think you guys know that to be true. It's probably one of the more chronic issues traders deal with. Anyways, I'm running over. I got to go hit my day job. I'll be in the futures room here in just a moment. I'll see you guys in the Sector Secrets Master Room later on today. Be good to each other. Thanks as always for joining us for Charts and Coffee, releasing the Kraken today. Be good to each other, gang.